Hi there, another stable business which is paying a nice dividend about 4.3%. And the stock price has declined by over 20% from its last peak. Maybe you know that AbbVie is a pharmaceutical company. They have different treatments on their pipeline and they keep growing, but in the short term they are facing some problems. Let me show you. As you can see in this image, revenue is expected to decline this year from 58 billion to 52 billion. And then analysts expect the revenue to rebound by 2027 to 60 billion. Same for the cash flows, which are expected to go down to 20 billion from 24 billion. And then they are expected to rebound to 25 billion by 2026. Moreover, their dividend is expected to increase more in the future. Analysts expect only a small decline in 2027. So their dividend is expected to increase from $5.71 to $6.45. That will be a dividend about 4.6% at the current price. So you can rely on that dividend as AbbVie is a stable business. Now, if you look at first quarter results, you can see that worldwide revenue was about 20 billion, a decrease of almost 10%. They have 4 segments and you can see better where they are losing money. For instance, immunology had a decrease of 9%. The biggest decrease was for the treatment Humira, which had a decline about 25%. Of course, they also had big gains for the treatments Skyrizi and Rivac, that had an increase over 40%. And the other segments, such as oncology, a decrease of 14%, neuroscience, an increase of 14%, and aesthetic, a decrease of 5%. So they had losses and some gains. As Humira represents a big part of the revenue, their numbers have been affected. And that's why analysts expect a decline in the future. Now, this is in the short term. The management expects over 21 billion for the segment immunology. But that will happen between 2025 and 2030. As they add more treatments to their pipeline, they will increase their revenue. You can see their pipeline in this image, where they have different treatments. As they get approval, the revenue will improve. But that won't happen in the short term, but in the long term. So AbbVie has more stability, as they have a lot of treatments that may be approved. You also should be aware of their debt, which is about 62 billion. As they are making over 20 billion cash flows, I think the debt won't be a problem. But if they increase their debt, you should be aware of this risk. Now, let's see the valuation. First, the risk. For 10% annual return, the fair value may be around 160 billion if their growth rate declines. That may happen if they face more competition and lose more market share. Be aware they are not alone. There are more companies that are trying to sell their products and gain more market share. If their cash flows decline, then the market cap can decline a lot. So you should be aware of this risk. The gray scenario, for a 10% annual return, the fair value may be around 300 billion. This may also happen if AbbVie delivers more growth in the future. They may get approval for more treatments, and one of them may be a winner, which can increase the revenue a lot. So they also have opportunities, as they have a lot of treatments on their pipeline that may be approved. As I said, this will take time. Don't expect these approvals next year, but over 5 years or even more. In the normal case, the fair value may be around 212 billion for a 10% annual return. That can happen if AbbVie delivers about 25 billion in cash flow, and they continue around that level. Of course, if they improve their cash flows, then the fair value will be higher. But if they decline, the fair value will be lower. That's why you have to focus on the risk first. As I said, those are the analyst estimates. You shouldn't rely too much on them. You can have an overview of what the market expects. Always invest with a margin of safety. If you are pleased with a dividend about 4.3%, then AbbVie may be a good investment for you. But if you want 10% a year with low risk, then you should wait for another decline or find something else. AbbVie is a stable business, has a lot of treatments on their pipeline, and they will survive. They will keep making money. But the important thing is when you buy the stock, because if you buy when the stock price is high, your risk of losing money is higher. That's why you have to invest when you have a margin of safety. As I said, the risk is that the market cap might go to 160 billion. If that happens, then you'll have a nice return about 10% a year, including dividends. So it's up to you. What return you want from this investment? 4% or 10% with low risk? And if you have any question or you want me to analyze something else, please let me know in the comments.